Good morning, traders. This is Finovo FS. In our topic today, we're going to look at market structure and how to use other block to take our trade. That's what we're going to look at this morning. We're going to look at market structure and how to use other block to take our trade. But in this video, we're going to look at different criteria that we will see before we take our trade in the market. In a forex market, we have three types of market. In the forex market, we have three types of what? Market. We have the uptrend market, we have the downtrend market, and we have the ranging what? The ranging market. But among the three market structure, we are going to focus on only two, which is the uptrend and the downtrend what? The downtrend market. Because when the market is an uptrend or a downtrend, we always have an opportunity to take our trade and to predict the market in a rightful way. But when the market is a ranging market, it gave us first breakout or first movement in the market. So we're going to look at, first of all, we're going to look at uptrend what? Uptrend market. Remember, in an uptrend market is a system in which the market is creating the series of higher high, higher low, higher high, higher what? Higher low, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. In this kind of market structure, our own is for you to focus on only opportunity to buy the market, not to sell. We always focus on only the opportunity to buy the market, not to sell the market, because the market is an uptrend market. And as the market is broken structure, we always look at the protected what? The protected low, because the protected low is the last low that broke what? That broke the recent what? The recent high. As the market is broken structure, our focus is just all about the protected what? The protected low, because these are the area we are going to look for an opportunity to take our trade. This is an uptrend market. So in an uptrend market is a market that is creating a series of higher highs and higher lows, higher highs and what? Higher lows. Now, once this market is creating higher highs and higher lows, only what you focus on a buying what? A buying scenario. You don't look for opportunity to sell. All these are just what? A pullback. So most time, and if you are a good trader, you can catch the pullback. Are you getting it? But my advice is for you to focus on the trending market, buy along the what? Buy along the trend. The only way you will stop buying is when the market return back to take this last what? This last low. Because immediately the market taking this last low, it means that the market has changed what? The structure from the uptrend to what? A downward trend. It means that the market has changed from uptrend to a downward what? Trend. The market must have to take out this low first. Once the market has taken out this low, now your bias now is looking forward to start looking for opportunity to sell the market. To sell the market. Because it means that the character of the market has changed from this uptrend to a downtrend. So what are we going to look for before looking for opportunity to sell our market? We have to look for a candlestick a candlestick that broke what? That broke the low. This candlestick here, which is the last green candle, or any of the candlestick before they pull it down, that broke what? This low. And before we look for that candlestick that broke the low, we have to look for a liquidity. In a market structure, the market has to build a liquidity. Once it has built a liquidity, it has to return back and clear the liquidity before tapping our other block. So from this area, we look for opportunity to sell to this to this level. Are you getting it? This is how to predict its market structure. Are you getting it? Because this high here that broken this low is our other block. And this pullback before the market went to our other block at the liquidity at the liquidity area. So once the market has tapped this our other block, one thing that you must know, you don't just enter aggressive. You must see a candlestick confirmation or switch to a lower time frame, allow the market to shift structure in a lower time frame. Maybe you have something like this. The market went up to tap this area, then allow the market to allow the market to enter the zone, which is this area here. Then allow the market to pull back from that area to clear this low. Once the market has cleared this low, you can over use your breaker block entry, because this low here is our breaker our breaker block. You can over use this low as your breaker block, or use a fair value gap around this area to execute your trade, then write it to this last low. This is how you predict the market, because from here you can see that this is where the market mitigate the block and clear this this high before returning back to break to break this low here, to break this low. Once the market has broken this low in a lower time frame, your own is for you to look for a last candle that broken this low, or look at for a fair value gap before you start selling before you start selling the market. These are how to predict a uptrend market structure. Then another thing that you must understand, maybe you are looking for opportunity that the market is creating higher highs and higher lows. You are looking for opportunity to buy the market. First of all, you must have to look at of when the market created highs, and the market is returning back. Allow you to take that last high, which is this high here. Once it has taken this high, before you can look for your other block, allow the market to return back to this area and let it give you some source of liquidity here before returning back. Then you cannot take this area as your other block and ride it up. But remember, immediately the market approach this other block, let's say the market has broken this structure here. Let's say the market has broken this structure. Once the market has broken this structure, what you do, you take the last bearish candle before the pulling up that broken this high as your other block. Now what you do, once the market has tapped this this high here, you must understand that in a lower time frame, the market must shift structure that will realign with this uptrend. So once the market went up and once the market went down and tapped this other block, what you do, allow the market to go up, then return back to this block, then push higher to clear this area here. Once the market has cleared this area, allow the market, you can take the breaker block or you can take the extreme what other block. But once the market has changed this structure in the lower time frame, your own is for you to take any area, or you can use your Fibonacci tools from that area to ride the market to the upward side and target the recent what, which is this recent high here. Now this pullback here that you see here, this pullback is your what? Is your liquidity area here. This pullback here is your liquidity area. This pullback here is your liquidity area. Once you have seen this pullback, knowing that the market, once you have seen this pullback, knowing that the market must have to sweep this area and tap this other block. Then this is an uptrend market. Then in a downtrend market, you can see that in a downtrend market, when market move up, for example, the market is coming what? It's coming down. Then broken this area here. Once the market has broken this area, allow the market to take another what? Area. If the market already created the liquidity before breaking, one thing that you must know, you must have to use one area as your liquidity area, then use the next area as your what? Other block. So let's say the market has broken this structure here. The market has broken this structure here, and it has broken another structure here. Another structure here. Since the market has broken this structure, you can see that first of all, you take out this low, take out the next low. But if the market spike up immediately, what you do, this is an other block. The last high that broken this low, this is another block. The last high that broken the next what? The next low. But if the market move up aggressively, the market must definitely react at this area and pull back to you. Then before going up to tap this area and sell what? And sell down. Are you getting it? Must go up to create what happened here. It means that the market has created what? Equal high. The market has created equal high. So once the market has created this area, this area is SSA or smart money trapped. So most of the smart money trader, they will allow most of the traders to enter here, thinking that the market will start selling from this area before the market push up to stop there at tapping the extreme order block that created this general movement before the market starts selling what? Selling down. But another thing again, you must always look for a confirmation. The confirmation is very important. The confirmation here is that once the market tap this area, allow the market to return down as if the market is selling. Then allow it to pull back up. Once it has pulled back up, then allow it to return back to this area as our what? As our change of character. Once it has taken this low here, when it has taken this low, it means that the market is already aligned with the overall higher time frame, because this is a lower time frame change of market structure. So once this area has changed, it means that the lower time frame is already aligned with our higher time frame. From here, we allow the market to return back to this other block and sell down to target this area here. We target the last area as our point of interest. But remember, you have already see the scenario or see the reaction of the market from this area here. Because the market has broken it has broken this low here, which is change the market structure. Now, once you have seen something like this, once you have seen something like that, it means that you look for opportunity to start selling the market to the downward side. The same thing with this one. You can see that immediately the market return to this level here, it shifts structure, then broken the reset high and return back to what? To tap this area here and push what? And push up. So let's go to the live chart and see some of the example how the market react and how it work. So let's go. And another thing before we go to the live chart, this one we said this is an uptrend what? This is an uptrend market. This is an uptrend what? It's an uptrend market. It's an uptrend. Uptrend. Uptrend market. Uptrend market structure. It's an uptrend market structure. Then this one too is a downtrend what? Downtrend market what? Market structure. Downtrend market structure. Downtrend market structure. Then in a ranging market, since we know that this is an uptrend market structure and this is a downtrend market structure, we'll talk about the three phases in the market, which is the uptrend, the downtrend, and the ranging what? The ranging market. Sometimes you will see that market will be dancing around one circle, which is when the market is moving up. When the market is moving up, like moving up, went up, return back, created this movement, return back, went up, come back, went up, return back again to take this area, then went up. As the market is doing something like this, your own is for you to be patient because this is a ranging what? This is a ranging market. Your own is for you to be patient for this market. Your own is for you to be patient in this market. Allow the market to take the high and the lows. Maybe this is the high. This is the high. Then this is the what? This is the low. This is just a ranging what? A ranging market. What I will do here, this is just a fake out. What I will do here, I will allow either the market broken above this area and give me a confirmation before selling, or allow it to break this high, give me a confirmation before what? Before buying the market. But for me to buy the market, first of all, I will allow the market to take out this high here. I will allow the market to take out this high. Once the market has taken out this high, allow the market to pull what? To pull down and went up to break this recent what? This recent high here. Once the market has broken the recent high here, okay, let me remove this one to this area. Let's say, okay, let's say we have something like this. Remember, we are talking about the ranging market. We are talking about the ranging what? the ranging markets. So we have the uptrend market, we have the downtrend market, then we have the ranging what? The ranging what? The ranging market. So in this ranging market here, this is how you see it. The market will be consolidating around that circle here. Now, once you have seen something like this, in this ranging market, your own is for you to focus and look for how the market will react. First of all, if the market broken above this high here, allow the market to return back to tap here. Most traders will just enter from here and buy what? And buy up. But if I'm trading ranging market, what I will do, I will allow the market to tap this zone and push up to take this high here. Once the market has taken this high, I will allow the market to pull back to tap this block that broken that high before I will buy what? Before I will buy the market. In this scenario here, it has already told you that, okay, the trend of the market has already changed from a ranging market to an what? Uptrend, because from here, if the market broke on this high and pull up to return back to this area, you know that this area as our block that broke on this high is a valid block that will push the market higher. But if you don't even wait for the market to take this high and allow the market to return back to this area can just be a fake out. This area can just be a fake out. This area can just be a fake out. Return back and hit here and start what? Sell it down. But if you allow it to what? To break, if you allow it to break this high here and return back to this area, there's a tendency that this market will tap this area and it push up. And once you start buying the market, one thing that you must understand, you must have to target this recent high, because this was the high. This was the high here. This was the high. And this is the pullback. So as the market is buying to the upside, yes, we know that the market will definitely create another high. But we'll first of all target this recent high here to take our profit target in this area. Then likewise the same thing. If the market, for example, if the market return back and take out this low here, allow the market to pull back. Once the market has pulled back, allow the market to return down to take out this low here. Once the market has taken out this low here, your own is to allow the market to return back to this area that broke that low. Then from there, you can sell and target this low. But in most cases, you will see that most people will take this low as a breaker a breaker block. A breaker block is a block that the last candle before the pulling up that fail to hold the price. So this block here, as the market is pulling up, most of the traders will target this area here and start selling the market from this area here. So they will take this area as their point of interest. They will take this area as their point of interest and start selling the market. But I will prefer that the market should pull deep into this area of fair value gap, something like somewhere here, or this area, or somewhere here. Or you can even use your Fibonacci tools to measure it before you take in your trade. So these are the three markets. These are the three markets that we have in the forex market. First of all, we have the uptrend market here. Then we have the downtrend the downtrend market. Then we have the ranging what? The ranging market. You can call it ranging. You can call it ranging. You can call it ranging market. Ranging. I'll call it ranging market. Ranging market or sideways market. Sideways market. So these are the three markets we have. We have the uptrend market, which is once the market is creating and broken the reset high in an uptrend market. And when the market is coming down to break the recent what? The recent low here is a downtrend what? Is a downtrend market. But remember here, this area here is our what? Is our equal what? Equal high here, which is the liquidity rested above this area before the other block. So these are the three markets that we have in the what? In the forex what? In the forex market. We have uptrend, downtrend, and the ranging what? And the ranging market. So I will take one or two examples in a live chart. Let's go to the chart and see some of the examples in the market. Now let's go to Euro. Euro what? Euro USD. This is the Euro USD. This is Euro USD. This is Euro USD. Now you can see that this Euro USD, I already analyzed it. Waiting for this area to what? To set the market down. You can see that, first of all, before looking at this area as my other block, I saw a sweep of liquidity here, then broken the recent low. Now, this recent low here that I was saying that the market broke the recent low, you see what happened? First of all, the market went up to this area here. You can see that from this area here, the market went up to tap this fair value gap. There's the fair value gap here, and so down to this level. But the market has not mitigated our candle, which is this last candle that broke what? That broke on this low here. So once this market return to this area here, it has cleared. This area is already liquidity, and there's a tendency that the market will clear up this area and push back to this area and sell down. And what did I say? That if let the market get to our supply area, we are not what? Just entering the market aggressive. Maybe you see the way the market is moving. The market is moving high, low, high, low, high, low, high. The market is creating structure around this area as it's going to the block. So what are we going to what are we going to do here? We have to look for a shift in market structure. A shift in market structure here. We have to look for a shift in market what? We have to look for a shift in market structure. Market is moving higher, returning back, and tap this area. Once the market has tapped this area, in a lower time frame, you will see something like market returning back to take this low here and pull up to this area before I will sell the market and target this what? This low here. Are you getting it? These are the markets This is how it works. So let's say another example. This is what we call maybe you are this is a downtrend what? A downtrend market. In an uptrend market, in an uptrend market, in an uptrend market, what are we looking at for in an uptrend market? Let's look at some of the pair. Let's look at some of the pair to identify the trend of the market. Okay, let's say if, for example, let's look at any of the charts. Look at any of the charts to predict an option what? An option market. Okay, let's see some of the charts to predict an option what? Option market. Let's see some of the charts here. I have some charts. Okay, I think, okay. Now, if you look at this market here, go to 30 minutes time frame. Go to 30 minutes time frame. This is what I was explaining to you. That once you see the market is broken, break of structure, then we have another break of what? Structure here. You can see that the market has taken what? This low here. The market could not create another what? Another low. What happened? The market return went up to take this recent what? This recent high. And immediately the market taking that recent high here. What happened? It means that the market has changed structure from this downtrend to an uptrend. Now, the last candle here, which is this candle here, last candle here, which is this candle here, this last candle, the last bearish candle before the push of this market is our what? Is our order block. The last push up in this candle is our what? Is our order block. So from this area, you can see that we have a liquidity. A liquidity rested below this area before our order block. So once you have seen that the market has tapped this area, you can see that it tapped this area and it start pulling up. First of all, I will target this area as my point of what? Interest, as my profit target. Target this area as my profit target. Why? Because it was the high that created all this movement. So what I will do here, I will switch to my lower time frame, either 15 minutes time frame or 5 minutes time frame. If I want to take it, I will not just enter the market and take it aggressive. I will either go to 5 minutes or 15 minutes time frame. So if I go to 15 minutes or 5 minutes time frame, you will see that from this area here, from this other block here, you can see that the market, first of all, tap this area to clear up this liquidity here. To clear up this liquidity. Then after clearing up this liquidity, you see the market went up to take the recent high here. Then after the market taking the recent high, you can see that from here, that's why I said you can even use Fibonacci what? Fibonacci tools From this area, you can use your Fibonacci tools. You can see that immediately the market broken this high in a lower time frame, the market pushed back to 60 what? 0.61% level, and you see immediately the market expand up. So this is the reason why I said you must look for a lower time frame confirmation. But remember, I told you that you can also take your profit at this high here. You can take your profit at this high. Once you enter the market from this area here, remember this is our general move. This is our general move, because this is the area the market shift structure. So from this area, once the market tap this area, you allow the market to shift structure, which is this. If I remove this one, you see that. If I remove this one, you see that. Let the market return back to this area. The market cleared this low as a liquidity, push up to clear this high, then return back to the fair value gap around this area and push higher. So this is how we predict a market uptrend and a downtrend market structure. Are you getting it? Is how we predict uptrend and a downtrend market structure. That will predict uptrend and a downtrend market structure. Market structure. That will predict the uptrend and the downtrend market structure. So for me not to take much of your time, guys, this video will be an help to you. Like, then you subscribe, and comment. I will bring a powerful contest on how we can predict the market, and how on that thing again. Want you that you must understand. Don't be too aggressive to take your trade. Don't be too aggressive. Once market has get to your order block, you don't just enter, because you are not the one that's moving the market. You are following the direction of the market. So allow the market to give you whatever thing that you needed before you enter the market. You don't just enter the market because you want to trade. Allow it to give you all the criteria that you needed before placing your trades.
Thank you for all watching the video. If you like the video, like, comment and subscribe.